Good evening. This is Ken Long from Tortoise Capital Management with the daily and weekly market commentary for December 11th, 2010. We are in bull quiet mode, and we are at the high end of neutral on the annual oscillator. 10-day market condition is we're overbought with a reading of 98. Under 10-day max pain, there are a number of very favorable and friendly looking names. Looking at Caterpillar, Disney, 3M, McDonald's, and Boeing. Monsanto in the S&P 100. And then in the ETF 100, looking at gold miners, Brazil, and China really stand out to me. No trends from the gap stat for SPY. The standard deviation of the gap is still 0.74, so a 0.75% of a gap in SPY is considered normal. You can see that we have bounced from oversold to overbought conditions and have been there for a while. No signals in channeling and overreaction. Pivot point at 124.27. You can see that in the volatility indicator here, ATR divided by price, we went from quiet back up to average, and then we are back down, have dipped down into the quiet. That's why we're quiet now. The ADX indicator bottomed out just below 15. God bless Chuck LeBeau, because across under 15 and then above indicates the potential of a new trend, and with green over red, this is favorable for the long side. In the market mosaic indicators, I like the fact that we are green and bullish on both the 200-day percent stretch and the slope of the 50-day moving average. ADX is just a smidge over 19. We're currently at overbought, so we're not in a hurry to chase, but we are prepared to reward continued momentum on a day-by-day basis. ATR percentage of 1.14% is extremely quiet. From our pattern trading, the only thing that really stands out is DuPont, symbol DD. In the daily tactical, zoom that up a little bit more. You can see the winners from Friday: Verizon, J.P. Morgan, and Pfizer. Some old reliables there. Boeing is a 3-day and a 10-day max pain and was a percent loser on Friday, so there's a potential for a rebound there. McDonald's is oversold on and max pain on 3 and 10 days, and it's at 11 on the 10-day index, meaning it's over. It's the only one in the Dow right now that is oversold, but it was not even a percent loser on Friday, and so that could be already the failure to fail further. So McDonald's is definitely going to be on our short list to watch. Among the ETF top 30, mid caps and small caps is the theme of this week. They were both winners on Friday. They're both in the overbought condition on 10 days and 52 weeks. The precious metals and commodity cluster were the percent losers on Friday, but with only less than 0.5% in there, that was not much of a failure, and so those are definitely in a position to continue to bounce if we see the U.S. starting to cool off a little bit. In our roll-up of the Dow, let's see, we have many dojis from Friday, and we have 551W set up in DuPont, so that's going to be one to take a close look at. McDonald's is the max pain range compression, along with Boeing, then Johnson & Johnson, Hewlett-Packard, and 3M. So that looks, those are on our short list as well. In the ETF 100, or ETF 30, looking at the same thing. Only a few dojis: XLP, XLY, and Treasuries. And we have in the number 2 position U.S. real estate, gold, utilities, and Latin America in the max pain range compression. You can see this little pullback in silver, although it was one of the percent losers. 0.2% down is not very much for a very volatile market. So I'm looking for a rebound in silver, and if I get it, I will be all over that. For some supplemental indicators here, the 30-day regression line, price is still above that, slope is up, and you can see that the slope of that regression line had pulled back to the 180-day average and now has crossed back over itself after a 1.5 sigma pullback. That's very favorable for the long side, and you can see on the price an extraordinary move off the bottom, measured pullback, nice rebound, and it's taken out the high at 123. No resistance overhead. That's very favorable for the U.S. Very positive indeed. And then the percent stretch, we got up into the green condition where it was 1 standard deviation above normal, pull back to average, and now is breaking through again. So there's room for another, as we've seen here, another 5% bounce in SPY without too much trouble at all. In the Dow Quality Report, I just want to take a look at J.P. Morgan, which was red on the 60-day quality and white on the 30-day quality, and that's a positive divergence there, which is reflected in the financials across the board. So that looks very favorable. And if we look at the ETF quality report, again, we'll see XLF is in this position where it was red on the 31 to 60 days. So 2 months ago it was red, and now it's white, so it's above average in the last 30 days, and that gives it a positive divergence of 2.09. So actually XLF and UNG are both in a position where they have been horrible and are now getting better, and you can see the improvement in natural gas right now. I still like that very long term. If we're interested in energy at all, that's one that has to stay on the radar. You can see the slight cool off in silver on the 2 month, but even so on the last 30 days, it's been good. So silver remains on my watch list. I like both small caps, IWM. You can see it's gone from yellow to white to green. It's got positive divergences in quality, so the small caps are still outrunning the broader market. MDY also went from yellow to white to green. Not quite as strong as the small caps, but still something to keep on our radar. And you can see that they're in better shape than the technology, which had been the leader in the U.S. before them. And that's let's take a quick look at the 30-day relative strength scoring. See if there's anything that we can see in here. And you can see Japan has pulled way back compared to the U.S. as the U.S. has started to bounce. In this you can see growth continuing, is the blue line, is pulling ahead of the value in the diamonds, and that's favorable for continued expansion of the U.S. And you can see all the commodities have turned down relative to the U.S., and that probably reflects a very high oil price already hitting an upper boundary. So I'd be cautious about oil positions if you have those. That's a quick look at the daily trading at the daily report set from Friday. Thanks for your kind attention.